Hey guys, this is Simon with Trade and Perform Coaching and Flow AI, and just wanted to do a 5 minute review of the levels from Friday and how the day broke down. So these were the levels that we posted, and in the room, what we covered was there's two areas. This white line was good support. There's this 17,923 was support. The red line was the all-time high, right? The green line was the prior day's high, and this green line was the prior day's low. And these were the two key support levels, right? So, and then in addition, we had the 50-60 retrace. So this is the 50-60. If you go back from to Thursday's low to Thursday's high, right? So remember, we're in a bull market. Normally, you would draw that 50-60 on a larger scale, but people get more and more aggressive as the market goes higher and higher, and there's going to be dip buyers looking to come in earlier and earlier in that process. So what we did once the market opened and we established this high is we take this 50-60 retrace and we adjusted it. And so now your key area becomes this 50-60 retrace. You can see off the 382, they tried to hold it off that 382 retrace, but you can see the 50-60. So at least in our room, this is where we went long, right in this area, off of a signal that we got. And then the natural retrace, right? So all I'm trying to teach in these videos is how the 5 minute bars work, how they show you how momentum changes. And this is the easy part of the read in general, right? This is the easier way to read the market. So if you look, we came down from the prior day's low to the current day's high. We did a 50-60 retrace. We found responsive buyers right over here, right? And what you'll also notice is, see, once we trap back inside, see how we couldn't close back above a prior down 5 minute bar. So the gray bars on my chart are down bars, and we just simply couldn't close above those. And you'll see, so what you will notice here is that really I would count this as my last down bar right here. I would count this as a reversal bar, this is a down bar, or this down bar. It doesn't matter which one you choose. If you draw a line across them, you'll see once you closed above, the retraces started getting bought. So here you can see pushes back down, started getting bought. If you use this as your level, see, once we closed, if that's, you're going to use that as your last 5 minute bar, once we closed above, retraces back down, started finding responsive buying, as opposed to this slow grind, almost trend day down within range that we were experiencing off the open, right? The next thing you'll notice, because we're in a bull market, is even though you had this trend day down, you might say, well, that's open, either delayed open drive lower or open drive lower. But remember, the characteristics that make open drive lower really dangerous are, first of all, if we're gapping up from a close below a prior day's low, right, which we're not doing here, right? This is a gap up into all-time highs, as opposed to we close below a prior day's low and then gap up to it, or we gap down out of range below a prior day's low, then we have open drive lower. Those are the really dangerous trend days down, right, where they can really wipe you for trying to counter trade those, right? So then if you continue to look at the structure, okay, we're in a strong market. We got responsive buyers at just behind the 62 retrace, right? So then if you take it from the high to the low, you'll see that once again we made a 62 retrace, almost to a 62 retrace, back up into the 18051, 18062, right? We're still below the initial balance of the day, and we consolidated through New York lunch, and then we found responsive sellers into the afternoon. And you'll notice two things that are interesting here. We never made it to key support areas down here, which is the first thing that's very interesting to me, either of these. And that's, again, a sign of strength, even though you could say, quote, there was weakness within the day. And then if you switch this chart, just to show you, so this evening, if you use a 24-hour bar, without making any changes to the chart, you will see, it'll be there in just a second. There you go. So you'll see we finally make it down to support this evening around 6:41 p.m. Central Time, and we found responsive buyers, and they popped it back up, right? But in a strong market, it just has a hard time getting down to support. Initially, now that we got down to support, and this will still be support tomorrow morning after the open, that support level will still be there. But now you can kind of get an idea of how the market functioned from a 5-minute standpoint. And then you'll also see how it does it chunk by chunk. See how we just get underneath the low of the day. We open up just below the low of the day, test underneath it, find responsive buyers. Retrace back up, back to the retail gap fill, come back down into support, find responsive buyers, pop back up, and then we'll see where we go the rest of the evening. So that's how I read the 5-minute chart. I do not trade off the 5-minute chart directly. Indirectly, I let my algos tell me where to step in and where not to step into the trade. But in order to use, even if you had those algos, in order to use them effectively, you do have to understand how the larger market structure interacts, and that's the goal of these videos. Anyways, my name is Simon. I'm with Floh AI and Trade to Perform Coaching, and I am looking forward to having a great week. So remember, 3 things. What you think about the market does not matter. Do what your process says. Make sure you have a process that's proven, that's repeatable, and that has a risk management plan built in that lets you survive negative days in the market, and stick to that plan no matter what. Try to think as little about the market in real time as possible and get rid of your bias. Okay? Anyways, y'all have a great day, and I will see everyone in the morning. Have a great night.